Saudi Arabia has replaced its long-serving oil minister in a major cabinet reshuffle as it embarks on unprecedented economic reforms triggered by the fall in the price of oil. Replaced by Khalid Al-Falih, the former health minister and chief of Saudi Aramco, the country's state oil company, 80-year-old Ali Al-Naimi had been in the post since 1995. As part of the changes, Al-Falih will head an enlarged Ministry of Energy, Industry and Mineral Resources. King Salman also appointed new ministers for water, commerce, health, transport, social affairs and pilgrimages. Majid Al-Qasbi was named head of the new Commerce and Investment Ministry, and Ahmad Al-Khulaifi was appointed governor of the kingdom's central bank. The king also restructured some portfolios, merging the ministries of Labour and Social Affairs and establishing a commission for recreation and culture. The Ministry of Electricity and Water was scrapped. Described by Forbes magazine in 2014 as the world's most powerful oilman, Mr. Al-Naimi was the driving force behind a shift by OPEC in November 2014 to defend market share instead of simply cutting output to support prices. Deflationary pressure on Dubai residential rents increased during the first quarter of 2016, with average values falling by about 2%. According to CBRE's Q1 2016 Dubai Market View report, residential properties faced sliding rates across virtually all locations during Q1, reflecting the negative impact of new supply on the market and slowing new job growth caused by ongoing economic challenges in the region. The report also said that residential sales prices also continued to drop during the quarter, with average 2% declines registered across the Emirate, following a 4% slump in the previous quarter. According to data from the Dubai Land Department, total real estate transactions were recorded at around $15 billion during the first quarter of 2016, delivered through 12,568 transactions. This comprised 8,440 sales transactions with a value of $5.8 billion, with mortgages accounting for 3,213 transactions with a total value of $6.7 billion. Dubai Marina was again the most prolific sub-market for sales, followed by Burj Khalifa and Business Bay. In terms of mortgages transactions, Dubai Marina was again first, followed by Muaisim 1 and Business Bay. CBRE added that based on recent construction updates, close to 15,000 new residential units could complete during the course of 2016, with the majority of these properties from secondary locations such as Dubai Land, Dubai Silicon Oasis and Jumeirah Village. The 14th edition of Automechanika Dubai, the largest international automotive or aftermarket trade show for the wider Middle East, kicked off today at the Dubai International Convention and Exhibition Centre. According to Messe Frankfurt, the organizers of the show, this year's edition achieved 8% increase in space as well as in the exhibitors' numbers, which reached 2,017 in comparison to 1,882 last year. They also added that the 25 countries' pavilions include 204 exhibitors from the UAE, 103 from Germany, 88 from Korea and 58 from the USA, with debut country pavilions from Japan, Iran, Peru and the Netherlands. According to figures provided by Frost & Sullivan, the Middle East spare parts market, valued at $12.98 billion in 2015, is estimated to grow 6% annually to reach $17.27 billion by 2020. Additionally, Dubai imported, exported and re-exported $2.76 billion worth of batteries, commercial and passengers vehicle tyres in 2014, comprising 22% of Dubai $12 billion total auto parts trade value for the year, according to Dubai Customs.
A lot of questions have been asked about oil price impact on the show. At this moment, we don't really see an impact. Of course, oil-related business is reducing their marketing budgets, but if you look at an overall after-market exhibition like Automechanika is, we only see growth. We estimate that the impact of deals, of total business to be generated during the exhibition and after the exhibition is roughly $8 billion.
We, as a B2B platform for the automotive aftermarket, we are also interested to have the Automechanika Frankfurt as the innovation platform for the industry, and therefore we think that in the upcoming years we will see a lot of changes into the industries, and that alternative drives will certainly playing a great role, big role into the industry.
On the sidelines of the exhibition, Automechanika Academy's Spare Parts and Maintenance Conference is taking place on the 9th of May, featuring a lineup of experts talking about the latest developments, statistics and trends in the spare parts and maintenance industry. Latest statistics show that passenger vehicle numbers in the GCC are estimated to increase at an average of 7.4% annually over the next 4 years, which is fueling demand for spare parts and components in the region, which is projected to be worth $11.9 billion by 2020.
We are into off-highway tire manufacturing, so we don't do the commercial vehicles, so we do everything off-road, and that's our niche, and that's what we specialize in. And what makes us stand out versus our competitors is the service. So for us, the end of a tire is not when you sell it, but it's when the cycle gets over of the tire life, and that's when we are with you till then. So that's really the big differentiator for us. Service is very important.
MAG Lubricant, one of the leading brand in Middle East and Africa. Our factory in Techno Park in Dubai. Actually, Automechanika every year it gives us a more chance and more opportunity to meet a customer from everywhere in the world. So we keep ourselves in since more than 10 years every year in Automechanika, and year by year more customer, more opportunity, more chance to get better business.
Like last year also, we are associated with Dubai Police for their campaign for the Safe Drive programs, and we are happy to be associated with them, especially the Dubai Police is a part of the Dubai government. We want to educate the people about the safest driving practices in the Middle East, especially in Dubai and the UAE country, UAE. And the culture shows our social responsibility in that way.
Sales of new private aircraft fell 16% in the first quarter from a year ago as demand weakened for the largest planes. Jet airplane billings were about $3.53 billion in the first quarter, down from $4.2 billion a year earlier, according to the General Aviation Manufacturers Association, which was the biggest decline in almost 5 years. According to the figures, demand for large cabin business jets has deteriorated as a result of reduced spending from the oil industry, a strengthening dollar and low commodity prices that are sapping purchases in some emerging market countries. Manufacturers, including General Dynamics Corporation's Gulfstream unit and Bombardier, shipped 34 large jets in the quarter, down from 46 a year ago. Shipments of medium-sized jets increased to 76 from 69, according to the report, is a sign that smaller U.S. companies are still returning to the market as customers. Excluding Dassault Aviation, which doesn't report first-quarter shipments, 122 total business jets were delivered in the first 3 months of the year, down from 128.